Hello traders, my name is Horvat and welcome to a new pre-US elections video analysis on which I will focus on the main markets such as Euro dollar, S&P 500, gold and crude oil. And I will take a look only on a big picture because I think that markets can be very volatile in the next 48 hours or so. So it's important to keep an eye on main powerful bigger trends rather than focus on the intraday price action, where I believe there will be a lot of fake outs, a lot of spikes that will try to clear stops before market finds real flows. Okay, so to go with the real flow, it's really important to look at the main trend. And on euro dollar, main trend is clearly sideways at the moment, but still within a bigger bearish picture, which shows to me that we will see a decline from current triangle wave 4 down into wave 5. I'm not sure if this breakout will occur already in the next 48 hours, but definitely I'm looking bearish for this fifth wave to unfold by the end of the year. On this daily chart, I made some adjustment this weekend when I was working on the chart. So what I'm looking at now is that this decline from 1.16 was not D and wave E finished at 1.13, but rather this whole structure can be also as wave D as part still of an ongoing triangle in wave 4. But actually I am expecting the same scenario to happen. Okay, we will be looking for more weakness after any free wave bounce. So either if you think that this is still wave 2 now, if wave D and D would be finished here, okay, you would still expect weakness after a free wave of retracement. Okay, and also if you think that this would be only sharp recovery, this could happen as well, but it can be only wave E, because usually when other legs are very complex, wave A, B, C and D are very complex, then at least one leg will be sharp, okay, and not complex. So since we are now in final stages then of this triangle, then I can expect that this wave E could also be very sharp. Maybe wave E is already finished here and we will see a strong move to the downside when US election results will come out. But I will stick with this view for more upside into ABC, and the reason is this gap from yesterday. Now, gaps will very rarely stay open. Okay, so as I know, let me check. As I know, gap here on the 4-hour chart. Where is the 4-hour chart? Gap occurred at the highs. You can see this blue candle was a high at 1.1140. So actually, we have a gap up there. Okay, so this gap should definitely be filled, and if will be filled, then we could see this move to the upside as wave C. Okay, so maybe we get a spike break to the upside and then push lower into an impulsive price action. Okay, so no matter how I look at it, I think that euro dollar could see more upside before it will turn lower. Okay, also the RSI here still has room to achieve 60 level. The MACD could move towards zero line before market turns to the downside. Okay, so but anyhow, I think that we are in the final stages here of wave B, but important level for bearish call will be a decisive break of this recent swing low at 1.0840. Okay, so if we get down there, then definitely watch for strong bears that could easily take us to new lows of the year. Okay, now let's take a look on the mini S&P 500. Here we will take a look firstly on monthly chart. As you know, we are bullish and we were bullish for the last few years and still looking to the upside into wave 5, which in fact is final leg of this stronger rally from 2009 lows. Also, markets will try to make changes in the big trends in 5 to 7 years. Now, This has been low formed in 2009 and now it's 2016. So actually we are in bullish trend, in bullish phase here for the last 7 years. So I think that top will form in over the next few months, okay, but we are still not there yet. We need to accomplish this wave 5 before we may continue, before we may turn to the downside, okay. Because on the daily chart I cannot count this recent recovery in 5 waves. Definitely it's not a clear structure, but as things stands right now, I think that it can be an ending diagonal here. So with elections coming, I think that there will be some fake breakouts, and on this bigger time frame charts, this could lead us to a new high before market turns lower. Okay, that would be ideal scenario for this pattern to unfold. Also, ending diagonals are very powerful patterns, okay. Clearly this overlap, okay, between wave 4 and wave 1 indicates fall in volume and momentum, which is very common for fifth waves, okay. So ideally we will see a push to the upside into wave 5, but with 3 subwaves, because each Latin ending diagonal should be made by 3 waves, and then market could turn down, let's say from around 2300, okay. That would be my upward projection, and I would be very careful with any longs on any stock market once we are here, okay. Also, the next important thing why I'm still bullish on stocks in generally speaking is because this decline cannot be counted in 5 waves, okay, no chance. Actually, this appears to be like a 3-wave movement, A, B, C with a triangle in the middle. Also, if you think that this is wave 2, then this will likely be wrong labeling, because triangles never occurs in wave 2 position, so it can be only a second wave of a 3-wave decline. Also, triangle occurs prior to the final move within a larger pattern. So this was our larger pattern, which was down in 3 waves, and it occurred prior to the final move in wave B, and wave C was our final move. So I think that we could see continuation to the upside, but this current recovery, I would not trust it, okay. We have seen a gap to the upside ahead of US elections, and US elections result will probably cause some reversals in the markets, okay. So what I think, it may happen that we could retest the lows from last week, and then market will turn to the upside. Ideally, we will hit 61.8% retracement compared to wave 3. This comes in around 2060 level. So I would look for this scenario to be ideal before market may turn to the bullish mode. Also, there's a gap, open gap from what was the price? Let me check if I have here. Here is open gap at the lows from 2080. So I don't believe that this gap will stay open and we will see straight move to the upside. I definitely would expect another retest of the lows, and to make this way for more complex, to clear some stock that are already in positions that are already long, and then expect a turn to the upside, okay. That would be the scenario. Now I will stay and stick with the bullish view as long market is trading beneath wave 2 swing low, okay. Also, now let's take a look on gold. Gold is a little bit tricky. We have seen some nice recovery last week, but now we are turning down. But still, important is to focus on a big picture, and the big picture is showing me minimum 3-wave movement is in play on to the upside after this nice breakout point that occurred here in February of this year. So I labeled this first leg in 5 waves as part of minimum 3-wave recovery. This is either so wave A or wave 1, 1, 2, extended wave 3, flat for a wave 4, and then ending down for wave 5, and then you had a 3-wave decline. Now we have seen a nice move to the upside, but the stock market, when stock market now bounced, we have seen a turn to the downside quite aggressively, okay. So this makes me a little bit nervous, because we also turned down from previous swing lows that turned into resistance. Okay, so I would not be surprised if market will just stay consolidating here, make some unpredictable waves here, maybe as a double zigzag or maybe something else, but I would not be surprised to see a combination here, which means a complex correction for this wave B or wave 2, while stock market could be turning to the upside, okay, into this fifth wave of an ending diagonal. So actually this count is also very probable. ABC x ABC, okay, or we are going to see maybe turn to the upside in the next 24 hours and we will continue straight to the upside. But both counts, important is that both counts are bullish and suggest that either we will see a continuation higher from here or from previous supports of this wave 4 at 11.99 level. Okay, so no matter how this market will unfold in the next few days, I think that if we focus on the next few months, we should see a resumption of an uptrend. Okay. And now let's take a look also on crude oil. Now on crude oil, as you know, we are labeled a completed three-wave decline from 2008 highs, especially after this nice 5 subwaves down into wave C. And as you can see, market after that broke strongly to the upside, moved above this downward channel. So it appears that market is now making a minimum three-wave recovery. Always when you're expecting that market is changing a trend and you're looking for minimum three-wave structure, you would expect that market or price will retrace back to the area of a former wave 4, and that is at $63.20 per barrel at this wave 4. So since we are now only consolidating after this five waves up from the start of this year, I think that there is definitely room to hit this target in the next, let's say, 12 months. Okay, but for now it looks like that we are moving into more complex wave B or wave 2, which I did not expect, but also we haven't seen any significant, definitely not a daily close above these highs from June of this year. So this proved to be only a three-wave temporary recovery. It was wave B that belongs now to a flat. A flat correction is a 3-3-5 pattern. Okay, so here was 3 waves down for a wave A, and then you got 3 waves up with a triangle wave B for wave B of a higher degree, and now it looks like this strong extended wave that already moved beneath this terminal support is actually impulsive wave C that could take us back to 39, but maybe also only to 41, 42 levels. Okay, that would be enough. But important is to keep an eye on short-term structures where completed 5 waves down, 5 subwaves down in wave C from this 52 figure will confirm the case that that this pattern, a flat correction, is finished and that we are headed higher. So what I see is only temporary, more complex correction, but still price action that belongs to a bullish picture. Okay. Here on a weekly chart also I see a nice reversal to the downside, but again downside can be can slow down at this 50 period moving average or maybe at this lower side of these Bollinger Bands. Also MACD has room to retrace back to zero line and then bounce to the upside, while the RSI has room to hit 40 level. Okay. Also I'm still looking at this head and shoulders pattern, a reversal pattern. Left shoulder head and our right shoulder is going more complex. Can be 2 right shoulders in the making now, but if you have more patience approach to trading, then definitely your trigger would be when this neckline will be broken. Only then we could look for targets back to 63, as I said earlier, based on Elliott wave counts. But this head and shoulders target will be then pointing towards 75. Okay, but definitely you would have to see a broken neckline to confirm end of a right shoulder, and then look for this more gains on crude oil. Okay, traders, thank you very much for your attention. Now I will probably will not have any exposure during US elections because I think it's a very risky game. Markets will be very volatile, but for others, for some traders, volatile markets represents a good opportunity. So if you're one of them, then just make sure to trade small and put your hands on the risk very well. Okay, if you're not trading, that's good because there will be definitely more opportunities ahead when market will settle down and once we are having US elections results on the desk. Okay, thank you very much for your attention and I will catch you with new updates tomorrow. Bye.